Hello, this is Mark Jaynes, co-owner of Rapid Mortgage. We wanted to record this tutorial about our new Rapid Cash Advantage program that's backed by Ribbon. There's a lot of technical features to this. I'm going to do my best to kind of walk you through start to finish exactly why this program would work for your clients and how to facilitate and work through the program. So the main idea behind the Rapid Cash Advantage is trying to help buyers compete with cash buyers, hedge fund companies, iBuyers, a lot of these things that are really driving up demand and making it really hard for even well-qualified buyers to get their offers accepted. This program is a potential solution for that. The big benefit of this program is it's going to remove most of the normal contingencies in a contract. Normally, the contract is contingent upon financing being completed. It's contingent upon an appraisal coming in at a certain value. It is contingent upon the sale of a prior home in order to qualify for financing. With this product, we can actually eliminate all of those contingencies and let the offer compete with true cash offers. So we're going to walk through a couple of different scenarios here. The main advantage is that this is a fully cash-backed offer. So if a buyer is pre-approved with Rapid Mortgage, we layer on this Cash Advantage program on top of that. If for any reason during the process the loan falls through, so the borrower loses their job 2 days before closing, something else just crazy happens and they can't close the loan, what would normally become just a dead transaction where now they lose out on the house, utilizing this program, we can actually have Ribbon step in and buy the property with cash. The buyer then gets an opportunity to rent that home for 6 months, fix whatever their issue is, and then still be able to buy the home at the same sales price they originally negotiated. So from a buyer perspective, it gives them a lot of extra assurances that one way or the other, they're gonna get this home once the offer is accepted. From a seller's standpoint, it is fully cash back. So they know that if they accept this offer, anything happens to the financing, they don't have to find a new buyer, wait another 30 days. We're gonna step in through Ribbon and buy the house in cash, so it's a guaranteed sale to the seller. So there's lots of advantages both ways on this. I'm going to go through some numbers. One of the big critical pieces here is that there is the appraisal protection that actually helps the buyer as well as the seller make sure that they get the fully negotiated price regardless of how the appraisal comes in. So I'm going to go through a couple of different scenarios here and show you guys the numbers and exactly how the math works on this. Big key to this program is when Ribbon steps in to fully cash back the offer, there are additional fees that are charged and it's equal to 1% of the purchase price of the home. So that's the baseline advantage where they're going to step in, guarantee the sale, guarantee that the house is going to be bought with cash if anything happens to financing, allows that buyer's offer to really compete. And then there's lots of nuance when it comes to the appraisal. So let's go through some real life scenarios. So when we get into looking at the appraisal, in the market that we're in right now, there's a lot of need for appraisal gap coverage, meaning that people are offering over list price and then offering to cover $10,000, $15,000, $20,000 if the appraisal happens to come in short. And a lot of buyers just simply don't have that excess cash on top of down payments and closing costs. So what we're going to do in this scenario is show how you can use Ribbon, have that appraisal guarantee, and still bring less to closing. So this is a real world example here. We actually had a list price of $250,000 on a home. The buyer wanted to put an offer in on the property, had very limited funds. They only had about $5,000 to go through appraisal gap coverage, and their offers kept getting rejected because of it. So we submitted this property into Ribbon. When we work with Ribbon, they're going to give us literally two values, and then there's kind of an optional third scenario. The first number they're going to give us is the Ribbon value. That is the value they will 100% back with cash and buy the home regardless of where the appraisal comes in. So again, in this case, list price was $250,000. The Ribbon value was $263,000. They also give us a max Ribbon value, which was $268,000. And I'll show you how these numbers work and how it actually affects the cash to close. So in this scenario, if this client would want to offer the $263,000, they would pay the 1% fee to Ribbon, and Ribbon is going to 100% back that appraisal all the way to $263,000 regardless of where it comes in at. So if it appraises at $250,000, $240,000, $230,000, doesn't matter. The client's paying the 1%. Ribbon is covering the shortage all the way up to $263,000. So if it appraises at $250,000, it's Ribbon, not the client, on the hook to send the extra $13,000 to closing. The buyer pays the 1% fee of the $263,000, which is $2,630, gets their offer accepted competing with cash, and allows them to fully guarantee the appraisal, not just a $5,000 appraisal gap. The market's obviously really competitive. So when we get into taking a look at it, maybe 263 is not enough to win the property. So they give us that max ribbon value. In this case, that was $268,000. So at $268,000, now there's a gap of $5,000 between the 268 and the 263 baseline ribbon value. The buyer can now buy appraisal insurance. So the 1% covered them up to 263. If they want the additional $5,000 in coverage so they can submit an offer at 268 fully backed by ribbon cash, they have to cover 25% of the spread between the max ribbon and the ribbon value. So the max ribbon is 268, the ribbon is 263. The difference between those two numbers is $5,000. The buyer pays 25% of that as appraisal insurance, or $1,250, and that now guarantees the appraisal all the way to 268. So again, if the appraisal comes in at 250, 240, 230, doesn't matter to the buyer, doesn't matter to the seller, ribbon is now on the hook for that full appraisal difference because the buyer bought that insurance. Now it works just like health insurance or car insurance. You pay for the insurance. If you don't need to use it, it's still money that is spent. So if the buyer agrees to cover that $1,250, that's what they're committed to regardless of where the appraisal comes in. Now, whether it comes in short or not, but if it does come in short, they're not covering anything above and beyond that. So they're basically setting up their max investment on the property. So again, they're paying 1% of the purchase price, which is going to be your $2,680. They're paying that $1,250 for the appraisal insurance. So they're just under $4,000 in total, with now an $18,000 over list price, fully backed in cash offer where they don't have to be concerned about where the appraisal comes in. Those are the two most likely scenarios. There is a third scenario if you want to get even more aggressive as a buyer to put an offer in on a property. They say, okay, if 268 doesn't work, we'll let you go 5% over the 268. So in this case, that would give you a max offer price of $281,400. So that's the most that you can offer on this property. But again, the listing was $250. You're now $31,400 over list price. In this case, the first chunk of it works the same. So at 268, you were basically investing, I think it's $3,930 in order to have your appraisal guaranteed to 268. Once you go past 268, you have to match dollar for dollar above that, which works like a true appraisal gap. So in that scenario, if you go all the way to $281,400, you're over the 268 by exactly $13,400, you would have to cover the $13,400 plus the $3,900 that you were investing in before. So you're going to be into the deal roughly $17,000 in that case if the appraisal comes in short. If the appraisal comes in at the full $281,400 that you offered, you don't owe that additional $13,400 because it works like a true appraisal gap. However, if it does appraise at $250,000, you're going to be on the hook for the $13,400 plus the $1,250 to cover the 25%, plus the 1% fee to ribbon. So it's kind of a best case, worst case scenario where your best case is you may only have to put $4,000 in the deal. The worst case is you're putting about $17,000 into the deal, but you're fully covered over $31,400 over list price, where the seller is now guaranteed to receive their full asking price, $30,000 over their asking price, the amount that you went into contract for, which is why these offers really stand out and greatly increase your odds of getting accepted. Based on the studies that they've done, it's 3 times more likely that your offer is going to get accepted if you submit a cash offer that's fully cash-backed offer through Ribbon. So we're really, really excited to roll that out. Obviously, that appraisal insurance, the full cashback guarantee that protects it and makes sure the closings happen regardless. If somebody loses their job, if the appraisal comes in short, even if the lender just made a mistake and missed something in the early stage of the underwrite and now at the end it's creating a problem, all of those scenarios are protected and it's a fully cashback offer. Everything can still happen. Seller still sells the home. Buyer still gets a chance to rent it for 6 months, fix whatever issues they have, and then be able to move in the home. One other really cool angle to use with this program is to use it to eliminate a home sale contingency in a contract. A lot of times people have a current home, they want to move up, they want to buy a new property, they can't afford to have both properties simultaneously. In a normal market, or if it was more of a buyer's market versus seller's market, they could write a contract that's contingent upon the sale of their current home, meaning we'll buy your house as soon as we sell our house. Well, in this market, that doesn't work very well. Sellers are rejecting those offers. They're looking for the offers with as few contingencies as possible. So that home sale contingency really is a death sentence for an offer right now in this market. What our program allows them to do is to get into contract without a home sale contingency. If they have not been able to sell their home by the day they're supposed to close on the new one, we'll step in through Ribbon, buy the new house for them, rent it back to them for up to 6 months, letting them move into the new property. And then that gives them time to get their property cleaned up, any improvements done, get it on the market and sell it. And then once they do, they buy the house back from Ribbon, again, at the exact same price that Ribbon bought it for. So if they get in contract for their new property at $268,000, they have to rent it for 4 months while they get their old home sold. They're buying the house back from Ribbon at exactly $268,000, not a dollar more. Also, Ribbon covers the closing costs on the first time they close when they actually buy the property for the buyer. And then the buyer will pay the normal customary closing costs when they buy it back from Ribbon. So the buyer is only paying closing costs once, and they're protected. If the home appreciates 50 grand over the next 6 months, doesn't matter. They're still buying it back for exactly $268,000. So it's a really, really cool program. It works great to help buyers get their offers accepted. It gives buyers peace of mind on the appraisal that they don't have to cover a $20,000, $30,000, $40,000 appraisal gap. It lets sellers know the deal is going to happen, so these offers can truly compete with cash. So please reach out if you have any additional questions on this. I think it's a great program. I think everybody should be taking a look at it while the market's competitive. We look forward to working with you guys on this. Please let us know if you have any questions.